Hi everybody, Alex Deploy here from Expert Forex, and in this video I'm going to show you an indicator that provides incredibly powerful signals. And if you watch this video and pay attention to the principles that this indicator is based on, it might explain to you why some of your deals are suddenly failing and are not as successful as you'd hope them to be. Now, many traders don't realize the principles that apply when they enter a deal. So let's go and talk about a deal where you buy the Euro USD. What in fact is happening is that you are buying the Euro as a currency and you are selling the USD. A lot of traders don't think of it that way at all. They see Euro USD, I'm buying that. You're not. You're buying the Euro and you're selling the USD. And the Euro is called the base currency and the USD is called the quoted currency. Now, why is that important? It's vitally important. You don't want to go and buy a base currency that's weakening, for instance, and you don't want to go and sell a base currency that's strengthening in this particular example, because they will be doing opposite to what you want them to do. Now, to take this a little bit further, and let's look at the base currency, the quoted currency, what the chart will tell you, and what actions you should take. Let's look at the base currency, and remember the example that I gave you, the Euro USD. If the Euro is strengthening and the USD is weakening, that's a fantastic sign that there will be a great uptrend. The Euro will go up because it's strengthening, the USD will go up, will also go up because it's weakening. So you have this double force pushing the Euro USD up. And the obvious action you should take is buy. But now let's have a look at some other scenarios. What happens if the Euro strengthens and the USD strengthens? Now that is a stalemate situation, because what happens, those are opposite transactions. So what will happen is the currency is inclined to go sideways, or just go up slightly, or just go down slightly, but essentially it will go sideways because the other one is going up and the other one is going down, because when the USD strengthens, it's actually going down. So you've got these two forces fighting against each other, and that's why it goes sideways and nothing happens. Now, I don't know how many traders actually take that into account when they're trading. So the other scenario what happens if the Euro weakens and the USD strengthens? Now, that is fantastic, because that is a downward movement on the chart, and you should be selling into a movement like that. And then what happens if both are weakening? Well, if both are weakening, the one is going down, the other one's going up, they cancel each other out, the price is inclined to go sideways, and you should be doing nothing. Has anybody realized that this is in fact what's happening when you're trading? So it is vitally important that you know what the base currency is doing and what the quoted currency is doing overall in the market. Okay, so let's go on. If the base currency is trading sideways, doing nothing much, and the USD is weakening, then there's a very slow uptrend, but not a strong one, and maybe it's a risky buy. And the other way around, if the Euro is weakening and the quoted currency is going sideways, then you have a slow down trend, and it is a risky sell, because you've only got one of the currencies pushing the price down, not both of them. And then obviously if you've got a sideways movement on both, then it will just go sideways, and you're supposed to do nothing. So this is the strategy that you should be following in every single Forex transaction that you ever do. You must always be trading a strengthening base currency with a weakening quoted currency, or a weakening base currency with a strengthening quoted currency. If you're doing anything less than that, you are reducing your chances tremendously when you trade. Now, what I would suggest is to take your last 10 trades and analyze them according to this analysis, and let's see what you come up with. And it might explain why some of your trades have failed and others have succeeded. Okay, so let's have a look at these principles playing themselves out in the market and how they are used in trading. So in this chart here, which looks like an extremely messy chart, but what these lines are, they represent the strength of a particular currency or the weakness of a particular currency. When it's very high, it shows the strength. When it's very low, it's the weakness. So what the Dream Machine does, for instance, is it trades when you have a very strong currency and a very weak currency. It actually trades in the opposite direction, because as you can see, it never lasts. So the strong currency weakens and the weak currency strengthens, and sooner or later they come together again. And you can look on this chart, the strong one and the weak one, sooner or later they come together again. Strong, weak, and they come together, and so on. And that's a principle on which the Dream Machine is based. Trading the strength of a currency and a weakness in a currency where both are overly weak or overly strong. It's not a situation that can last forever. So that's a bit of a reverse psychology trade, but I'm going to show you some different ways that is used. Now, how can you tell when a currency is strong and when a currency is weak? And that is the indicator that we've just created, and it's going to help you tremendously in your trading. But first, let's have a look at some other ways of telling a weak and strong currencies. So, for instance, this is the Forex Dream Machine. It's an EA, but it also has a finder information. And the finder information, what that does is it will look at the strength of a currency and then look at the weakness of another currency, and it will say the difference between the two is a particular number. Now, if we look down here, you'll see on the 1 day time frame, the CAD is 55 units stronger than the euro. So that's telling us that those two currencies are far apart, and those are likely trading currencies. The same thing applies here to the CAD yen. The CAD is 55 units strong and the yen is 55 units weak, and again, that's the difference between the two. So this the finder on the Forex Dream Machine tells you all that information. Furthermore, you can go and have a look at the individual readings of each currency compared to its crosses. And as we've seen here, the Euro CAD, let's go and have a look at the Euro CAD. You can see here that it has, there is the day reading, which is 8, which means that the Euro CAD is oversold by 8, which means it is so oversold, it is likely to turn up because both currencies have that big difference. Now, that's one way of using strength and weakness readings. Now, if we look at the 360-degree indicator, one way of reading the strength of a currency and the weakness of a currency is to look at the RSI readings of that particular currency. Now, here I have the RSI readings for the 15-minute, 1 hour, 4 hour, and daily. And the type of thing that you would do is you'd say, what is the lowest reading that there is? And there it is, it's 14. And what is the highest reading that there is? And there it is 94. So those are the highest oversold and the highest overbought currencies that you can find, and that gives you an idea of trading opportunities, because that currency is extremely strong and that one is extremely weak. And notice they both have the CAD in them, so that gives you an idea of where to look. You could look at that individual currency, you can look at that individual currency, but you could also look at the CAD element of those currencies. So the RSI gives us a good indication if a currency is overbought or oversold, or a cross is overbought or oversold. But The RSI doesn't give you the euro on its own, and so on. To do that, we look at the currency strength part of the 360-degree indicator, and it will tell us how this one works is how many pips has this currency lost compared to all the currencies that it trades against, and how much has it gained compared to all of the currencies it trades against. So if you look down here over the last, and I'm just going to look at the daily just to give you an idea, you can see all the red ones have lost pips. Those are the pips lost over the last day, and those are the pips gained by the other currencies, the green currencies, over the last day. And then if you look back a week, you can see, and if you look like a month, and you can clearly then see that the yen has been the weakest currency over the last month, and the CAD has in fact been the strongest currency. Now, if you had bought the CAD yen, in other words, bought the CAD yen a month ago, you'd be smiling all the way to the bank. So that's what it's telling you, missed opportunities. So there's various ways of finding strong currencies and weak currencies. So if we look back at the Dream Machine, you can see here are the readings, the RSI readings for all the crosses that there are, and then what we do is we get an average of those readings, and we can then say, okay, oh, look at this, the euro is very strong in the hourly time frame, 63, or it's very strong on the 30-minute time frame, because we're looking at the average for all of the euro's crosses, and that average is what we're going to use in our indicator that I'll show you pretty soon. Okay, so here's the indicator. It's called the base quote analyzer, because that's what it does. It analyzes the difference between the base strength and the quoted currency weakness, or the other way around. All right, so let me explain a couple of things. You see this purple or magenta line represents the quoted currency in this particular case, and the blue line represents the base currency in this particular case. So what if we look at this, ignoring the speckled lines for now, if we look at this, it's saying that the quoted currency is strengthening and that the base currency is weakening. That is what this graph is telling us. And remember what we said earlier, because we have a strengthening quoted currency and a weakening base currency, the trend will be down, and lo and behold, there's the downtrend while it lasted. So this indicator will tell you when there's a difference between the base and the quoted currency. Now, that was a downtrend. Here's an uptrend and the opposite. So the blue is now above, the magenta is below. They are deviating, as you can see, and because they're deviating, there's your nice uptrend. So that's one way of identifying the strength, using the strength and weakness of a currency to actually identify trends. So number one thing is that the indicator will give you the relative strength and weakness of currency. So when they are deviating, moving in different directions, that's when trends happen. And when they are consolidating, that is where, as mentioned on that table, they both going sideways, nothing much is happening. So and look at that, everything just went sideways on that particular chart. Now there are some additional signals that we've built into the indicator that makes it a super indicator, and the signals are this dotted line. Now that dotted line is nothing magical. All it is, it's a moving average of the purple line. So the purple dotted line is a moving average of the purple line, and the light blue is a dotted line is a moving average of the light blue line. So why is that important? Because when there's a cross, when the moving averages crosses like that and crosses like that, it means that those trends are over. That's one way of looking at it. The other thing that it means is that if you look at the crossing, now this one's crossed outside of this picture, but there was the cross where the purple came up and crossed over the moving average over there. That is an entry signal. So when the solid line is above the dotted one, it shows a strengthening, and when the solid line is below the dotted line, it shows weakening. So this is a confirmed situation where this line is strengthening and that line is weakening, and that is why you had this this trend, and it lasted till the point where the dotted line then crosses and crosses, and then it says, okay, this trend is over now, you can get out of the deal. And the same thing applies here. You can see the dotted line crosses there. The dotted line already crossed over here, so it was already giving a buy signal over here, but you had to wait for the magenta line to also align, and there both of them are on the same, and there we go. It took off like a rocket. And one of the things I used to say when I was trading is when I see something like this, I get in like Flynn. Now, I don't know, a lot of people actually don't know what that means, and I'll give you an example of that pretty soon. But that is essentially how the indicator works. You've got to watch the crossovers of the dotted lines, and there's another signal that you can watch. You can use the crossover of the solid lines as entries and exits too. So that crossover over there, you could have got in a little bit earlier, but the problem is it keeps you in a little bit longer. You would have got out over there, and there would have been a few whoopsaws. And then here again, look at that. The crossover there was a good signal to get in there, and but it would have kept you in a bit longer, and you would have been exposed to the downtrend too. Whereas if you get out at the crossover of the moving averages, you get out at the right time. And to show this to you on a full chart, here's a full chart. And why have I got two indicators? Because I like playing around with different settings. So the top one has got sensitive settings, 444. The bottom one has got less sensitive settings, 884. And they give slightly different signals. Sometimes the entries are the same, but the exits are different. Sometimes the entries are different, and the exits are the same. So they do give different settings. They also, some are more delayed than others. So, and that's why I like playing around with this to find the kind of signals that I like to give. And these are the ones that we've already looked at. There's that down trend, there's the uptrend, and for instance, that slow uptrend there, if you did the cross over, you can see the crossover there, it would have kept you in the trend nicely. But as I say, it starts giving away at the end, but then it's where you should be using these moving averages crosses to help you. Now, you can see if I use slower settings, the waves are much bigger. There's no whipsaws, but they do, they get you in later and they get you out later. So you've got a balance between sensitivity and getting in and out later rather than sooner. But these moving average crossovers help you a lot in that regard. So the beauty of this indicator, it can tell you whether you're trading a strengthening base currency and a weakening quoted currency, or it can tell you the status of the strength of your base currency compared to your quoted currency. And the strength is actually measured by comparing it with 8 other trading currency types. So that is why this is a composite indicator. I must just warn you, because it trades the whole market like the Dream Machine, when you load it up for the first time, it will take about 5 minutes to set itself up. It has to calculate hundreds of calculations to get the relative strength of each currency, each base currency in each quoted currency. But if you understand this principle of never trading currencies that are not showing either a strengthening of the base and a weakening of the quote, or a weakening of the base and a strengthening of the quote, you will never make money, because you are actually doing suboptimal trades. Now, I mentioned the expression in like Flynn, and we used to trade in groups, and people used to say, did you take that trade? And you would say, yes, I was in like Flynn. And basically, the expression comes from this actor called Errol Flynn, and I think he acted in about 1930 or 40 or even 50, and he was an amazing guy. He was an adventurer, he was a film star, he was a celebrity, but he was best known for his ability to attract women, and he did that in the thousands, literally thousands. I think he held some type of record in that particular area. So the expression in like Flynn is slang for me having quick and easily achieved a goal. So he went through women quite fast and gained access as desired. And that's what we say when we enter a deal. We say we're in like Flynn. We don't mess around, we get in straight away. Here's another explanation of the meaning, which is most probably the more correct one. It refers to Errol Flynn's popularity with women in the 40s. Oh, there we go. And his ability to attract women was well known throughout the world. So if you've got a grandfather or grandmother, go and ask them all about Errol Flynn, and they'll tell you why he was so popular. He was a role model for most men. Most men wanted to be adventurers. They wanted to be film stars. They wanted to be celebrities. And they wanted to be popular with the ladies, and he had it all. Interesting enough, he was also an Aussie, so another Aussie makes it good in Hollywood. Okay, by now you must be asking, how can I get my hands on this fantastic indicator that tells me the strength of the currencies that I intend trading? Well, if you're a Premium Advantage Forum member, you can download this indicator for free. If you're not, it basically will cost you $20 to join the forum. So in effect, it's going to cost you $20 to own this particular indicator. And where you find it, you go down through all the benefits of premium members. And the second biggest benefit, a lot of people are taking advantage of the biggest discounts that you can ever get from purchasing EAs and so forth, is one of the biggest benefits. But the premium indicator is also a big benefit. I'm just going to click on that and show you where you can download this indicator. So there's a few indicators. There's the market volatility analyzer, and then there's the base quote analyzer indicator. So we'll go in there, and there you are. There you see the picture I've just shown you, and that particular table, and there's the download. You just go and download that indicator, and you can start using it straight away. As I said, give it a few minutes. When you load it up, nothing happens. You think it's broken. It's actually working very hard to sort out your history, because some of the brokers' history is really bad, and it has to realign the history to give a proper reading. So there's a whole process that's been built in by EA Factory to do that. But once it's done it, you can freely use this base quote analyzer for any currency. That's the beauty. You can load any currency on, and it'll immediately split it and say, here's the base currency, here's the quoted currency, and here's the strength of those two. So we'll give you links to the club, as well as to the Dream Machine, for instance, the 360 indicator, and so on. Now, I hope you've learned something from this video. It is very important that you appreciate the importance of the strength and weaknesses of currencies when you are entering a deal. You can increase the chances of success tremendously by knowing the strength of your base currency and the weakness of your quoted currency, and entering, as I said, when that moving average crosses over, that's a sign that now I'm ready to change, and those are fantastic signals that you can use using this indicator. So I hope you enjoy this indicator. From me, Alex Deploy. Cheerio.
Yeah.